Crypto investors in the United States, this video is for you. This is extremely important because the IRS is moving on anybody who does not pay their crypto taxes. Three things you need to know in this video. I'm going to break it down for you. I'm also going to share what I've done with my crypto taxes back in 2021 and how I track my current crypto portfolios right now. I did this last year and I'm doing it again this year. And this is obviously a good idea, in my opinion. I have somebody who full time does this for me. So many traditional accountants are not yet hip to crypto. They're getting there. So I have somebody who is hip to crypto tracking all of my transactions. We'll get there in a little bit, but I want to jump in this video because it's very, very important. Tax season is coming. It's not that far away. So keep this on your radar. Know that these three things are something you have to be aware of. So let's move through them. And as we do, make sure you smash the like button, subscribe to the channel, really helps us out. Now, cryptocurrency is considered property by the IRS. So again, capital gains or losses apply as if gains are additional income while losses decrease income reported. That means when you buy crypto, you have exchanged cash for property. That does not trigger a reporting requirement with the IRS. The buy does not. However, once a U.S. taxpayer sells that crypto, the U.S. tax code requires them to report their capital gains or losses on their income statement. Now, how to account for crypto sales properly? There's three different methods that you could take. It's FIFO, LIFO, or HIFO, okay? First in, first out, last in, first out, and highest in, first out. To determine whether a sale resulted in a loss or gain, you must first establish a cost basis. So this is how you do that. There are three methods that are all valid for finding the cost basis. Now, I want to interject here because something I do, every asset I get into has its own spreadsheet. I account for when I got in, when I got out. In addition to that, I account for any gas fees that I paid, which of course on the Ethereum network, we do pay those. And then obviously the buys and sells tax on specific tokens. So both the buy and sell tax on tokens and gas fees are write-offs. Those are something that I write off. I have, again, full-time somebody hired that goes through and runs all of my sheets for me. And more on this business that, a good friend of mine is creating. I'll bring you more up to speed on that in the coming weeks. He is actually creating a business to allow this to be done for anybody who wants his services. And I'll be bringing him on the channel to kind of tell everybody what he does and how he does it. And if you're looking for somebody to help you with your taxes, he could be it. And we're working on some details. I might even have a referral code to get you some, percentage off a purchase if you want to try it for a month. But I'll bring him on in the weeks to come. Maybe, upwards to a month. He's doing some things basically right now, creating all the business, setting it all up, getting it all ready to go. Now, the only requirement is to follow a consistent accounting pattern. Be consistent with everything you do. And within each income tax reporting year, taxpayers can change their cost basis method from year to year, though. And that's exactly what I do. It's very consistent. Every sheet is done the same, but it's just a different asset, right? And when I'm in, when I'm out. Now, thirdly, no section 1031 like-kind exemption for cryptocurrency. So basically, when you trade Bitcoin for Ethereum, for example, this does not defer your tax obligations on any capital gains. Okay. You don't, some people think, oh, I have to go to cash in order for it to be a capital gain. No. When you go from crypto to another crypto, that is a taxable event. You have to report your gain or loss in that trade. Okay. So that's very, very important as well. So remember these three things. Be consistent with how you account for your crypto sales. Okay. Secondly, when you trade Bitcoin for Ethereum or whichever asset into another asset, that is a taxable event. And thirdly, you do not have to report a buy with the IRS, but anytime you sell cryptocurrency or trade, the U.S. tax code requires you to report your capital gains or losses. So these are three things you have to know when you get ready to do your crypto taxes here in 2022. I appreciate you guys stopping by. Hopefully you got some value out of this video. If you did, let me know down below in the comments. Hit the like button and subscribe. I'll see you guys in the next one. Bye.